Right. Hi. Morning traders. Welcome to Malika Pai 8. Aiman here. So, looking at the S&P 500, it has gained 30 points to charge higher, closing at fresh higher high to at 6,227 points. Well, this bullish trend was also supported by the SMA crossover, which signals that the bullish momentum remains intact. So sentiment was uplifted by the strong gains in tech as well as the US Vietnam trade agreement that charged 20%. So also, positive sentiment was further boosted by the soft labor market, which could indicate a rate cut ahead. So, looking at the charts, right, we think that 6,100 level support to be a key level as bullish momentum strengthen. So, room for further upside could stretch towards the 6,300 level. Okay, looking at the WTI, it has given us a slightly clearer view for now after the price break above the sideways trend over the past few sessions. So still holding strong above 64 level. Last session jumped almost 3% higher to close at 67 US dollar. So sentiment now remains cautious. I think there's a news highlighted that there is of higher oil supply moving forward on OPEC output decision next week. So we can expect that the oil price to remain steady at current juncture. Any fresh positive catalyst could push the oil price higher, potentially eyeing for the psychological $70 US dollar. So support remains steady for now at 64 US dollar. All right. Looking at the Hang Seng Index futures, HSIF remains steady, gaining 89 points on yesterday's session to close at 24,173 points. Well, if you can see here, all of the moving average are now trending higher, signaling that the bullish structure remains intact. I think the gain was lifted by the further positive expectation on the upcoming meeting in China to see if there's any fresh stimulus to be introduced in the middle of the tariff concern. So that being said, we expect the HSIF to continue its bullish momentum, potentially eyeing for the bullish breakout beyond the 24,500 points. Well, if this to happen, do watch out for the next resistance at 26,000 level. All right, looking at our local market, FKLI. So as for the FKLI, the index has tested the immediate resistance at 1550, but failed to close above the resistance. Also, if you can see here, it has charted a new higher high, signaling a positive price action. Yeah. So up until yesterday, I think the starting of July seems positive for now. As we believe that the overall market is picking up. Yes, we believe that overall market still experience a positive inflow from the foreign side. So I think it's good to see that they are back since the whole June was cumulative net sell from the foreign funds. Also, the overall trading volume is now moving higher, indicating more interest incoming. So, right. So since construction property is gaining traction now, I think some of the counters that you have in our watch list, like Everland, Sunprop, and also MN. So do look out for the breakout of of the yellow highlighted counters. And I think yesterday, Becca has experienced a breakout, which could give some gains to the traders. All right, so just to share with you, I think, oh, right, I think the broader Asia market now is looking positive. Uh, well, in expectation of the US rate cuts as it follows through the major indices. So we have Malaysia, Hong Kong, Singapore, Korea, Japan, and also Thailand to give a sense of the Asia market. However, now raise a rise on the Fed's decision and the tariff uncertainty across the nation. Right. Moving on to FCPO, well, it has rebounded higher yesterday, closing at the above 4,000 level. Well, finally, giving us some direction to the market as it has breached above the consolidation range or zone. So the price was lifted by the overall June shipment data, which increased to 4.7% month-on-month, signaling the uptick in demand. Also, I think the positive sentiment lingers around the expectation on the stronger demand coming from China, which uh, they are now ramping up their efforts to boost the economy. So looking at the charts now, we can expect that the FCPO price to remain steady, potentially hold above the 4,000 marks, which yeah, above 4,000 level, with the near resistance to look at is at 4,150 level. So looking at our trading stocks for today, we have Yinsen. So it has climbed higher and break out above 2.45 ringgit. So we expect the momentum to test the next resistance level at 2.60 ringgit, followed by 2.75 ringgit. Well, if the momentum to shift to the to bearish and break below 2.30 ringgit, this would then the market sentiment and both for further correction or retracement, I would say. So oops. Right. So next we have Kellington Group. So the stock has breached above the 3.75 resistance. So should the momentum to follow through, the counter potentially testing the next resistance at 3.95, followed by the next resistance at 4.10. So falling below the 3.60 will reverse the bullish structure. Also, I think a few days ago, if you look at Sean's report, he kept his DP at 3.69, riding on the positive outlook for Yinsen. Well, also if you look at the current price now at 2.47, well, it is still not too late for now for Yinsen, right? Okay, so I think for Malaysia, for trading stocks, that's all from me. With that, I stop here and pass on to Queenie. Thanks, everyone.
Okay, thank you, Aiman, for the sharing. Let me just share my slide, share my screen first. Okay, so today we have just published a trading idea report on a company called TechStore. TechStore is IT system integrator company in Malaysia that sets up and maintains smart systems for public infrastructure like train stations, immigration centers, and government offices, covering areas like security cameras, passenger infotainment screens, ticketing systems, and IT automations. It also provides long-term maintenance services to keep these systems running smoothly. So TechStore has established itself as a key IT solution partner in Malaysia's rail infrastructure, with over 60% of revenue since FY21 derived from the public land transport projects. The group has delivered 6 out of 7 key subsystems in the railway's ecosystems, including rolling stock and depot equipment, signaling, power, communications, automatic fare collections, we call it AFC, and IT maintenance management systems for 2 out of 3 LRT lines and both MRT lines in the Klang Valley. Its early involvement in the Johor-Singapore RTS link in 2021 cements its reputation as a go-to tech integrator in a space with high barriers to entry, and that is typically dominated by international players like Thales. Sorry, I think I shared the wrong one. Okay, let me just reshare my screen. Okay, I think right now you guys are at my training idea report. Okay, so next, why we like TechStore is because of its clear visibility through its record high order book. So TechStore offers strong earnings visibility backed by an order book of about 110 million as at 31st March, equivalent to about 1.75 times of its FY24 revenue. So with at least 57.4 million expected to be recognized over the next 9 months of 2025, this is further supported by additional wins, including new maintenance contracts secured in April and a 60 million job from the Ministry of Home Affairs in May. With proceeds from its IPO strengthening its balance sheet and workforce, TechStore is now better equipped to take on higher value and technically complex projects. So for information, the highest value contract they have ever taken is about 77 million. So we foresee they with their current strengthening of financial footing, they can actually take on jobs up to above 100 million. So we also see a robust tenders in rail and government technology. Okay, so with a tender book of 772 million asset, 30 April, TechStore is actively bidding for transportation and government-related projects, including the Penang LRT, which are right now under construction and slated to commence in a few years' time, and upcoming Johor developments. So for your information, the company also intends to set up a branch in JB to serve its RTS project. So for the market overview, Malaysia's IT services market is projected to grow at a CAGR of 5.6% to 29 billion ringgit by 2028, according to the Protege Associates, while the connected rail solutions market is set to expand at 8.5% annually to reach USD 17 billion by 2033, according to verified market reports. This growth is underpinned by national efforts to digitalize public transport, including Prasarana's planned Open Payment System (OPS) for the Klang Valley's rail and bus services. So with the order book in hand and assumption of 20% win rate on its tender book, we forecast a 21.4% of earnings CAGR from FY24 to FY27. Then this gives undemanding 8.5 times FY26 FPE for this company. And we also derive a fair value of 32 cents after assigning 15 times PE to TechStore's FY26 F earnings. This valuation is at the lower end of the 15 to 20 times range we typically ascribe to system integrators in order to reflect its smaller market cap. And so in my second page, in my third page, I also did mention who is its peers when it comes to tendering, so you guys can have a look. So in short, it actually compete with Gold Hub Capital when it comes to real infrastructure. I only mentioned those who are listed. Then there are also some unlisted and international players. And then when it comes to public sectors, which is government project, it might bump into players like Infomina. Okay. So key downside risk to our earnings forecast and the recommendation will be failure to replenish its order book, okay, and any delays in projects, okay, and then slowdown in real and public sectors tenders. Okay. So all in all, TechStore is riding the wave of Malaysia's digitalization push with deep roots in the rail and government tech space. From brownfield system upgrades to greenfield mega rail projects like Penang LRT is plugged into the right markets at the right time. A record order book and a high tender pipeline underpin strong earnings visibility, while its 21.4% FY24 to 27 F earnings CAGR and undemanding 8.5 times FY26 FPE make it a compelling overlooked proxy for transport and public sector tax spending. So with a fair value of 32 cents, that gives a potential return of 78%. So that's all from me. I'll pass on to the next speaker. Thank you.
Thank you very much, Queenie. Good morning, everyone. This is Sean here. Moving on, we have an Enproserve IPO note. This company is an experienced mechanical and civil engineering service provider focusing on plant maintenance and turnaround services. They also have an EPCC and facility management services business segment as well. The company is expected to generate reliable cash flows up to 2029, backed by 33 ongoing contracts, including 6 turnaround contracts. And the customers that they serve are mainly the oil majors, Petronas predominantly, and also petrochemical company in Malaysia. The plant turnaround segment dominated 83% of FY24 revenue, and with an almost equal split between the other segments. Interestingly, we are seeing about almost 3/4 of the revenue derived from Johor, Pengerang predominantly, followed by Melaka, Terengganu, and Putrajaya. Now, the Enproserve aims to raise about 50 million ringgit from its IPO, mainly to purchase new equipment, vehicles, including new lorries and mobile cranes, as well as setting up a depot crane facilities in Paka to expand its crane rental business. The company has been expanding its mobile crane fleets with about 24 cranes. Mobile cranes at the moment, after securing 7 long-term contracts from Petronas to provide the rental of lifting equipment and vehicles back in 2023's September. The remaining proceeds are meant for bank borrowings repayment and also working capital purposes. Now we expect with the expansion in the crane business, we believe it will help to increase the other segment of revenue through the rental business. Also, it will help to improve margins from the plant turnaround and maintenance segments with mobilizing these cranes internally. As such, we are projecting revenue growth at a CAGR of about 25%, driven by higher plant turnarounds and also margin improvement arising from new crane businesses. As such, we derive a fair value of 28 cents as compared to 24 cents of its IPO price, based on the 10 times FY26 PE. With this valuation is very much in line with Bursa Malaysia Energy Index of current valuations. And benchmarking against the peers, we're seeing it is a decent discount to its direct peer Dialog, which is also involved in planting around and maintenance business. Meanwhile, Steelhawk, which is another peer, could also compete with Enproserve under the CMW contracts. So the stock is the closing application date for this stock is 8 July, next Monday, with an indicative listing date at on 18 July. So that's all from me, and also that's the last report that we're presenting today. Thank you very much. See you guys tomorrow, and happy trading.